and welcome back to Market Shares. I'm your host, Tony Blodgett, and today I'm just going to cruise through the interwebs here and share a couple articles with you guys. Like the name of the show, we're going to share what's going on in the market. And of course, I'm going to give you some of my color commentary around my thoughts. I've really focused on 4 articles that I was reviewing in Housing Wire today that I think would be interesting for us to dig into a little bit. And, a couple of them kind of tie into one another. And then some are just a little bit off, a little bit different topics. But nonetheless, I wanted to spend this time with you just going over a couple things about the market. Now, as far as a market update goes, you guys, we're back at war, right? We're back at war again. So, I don't know when things are going to calm down with the war in Iran. The Strait of Hormuz is still having issues. Obviously, with getting oil tankers through, it's like they're going and then they're not going and then they're being blown up. Look, there's no question that this is an absolute distraction. Oil prices have increased a little bit, but surprisingly, not as much as you might expect, given the level of escalation that we've seen over the last, week and a half or so. We're back into the mid 80s, I think, for the price of crude oil, but could have easily shot right back up into the 90s, over 100, given the escalation that we saw after the memorandum of understanding clearly was not understood by all parties. So I'm not going to belabor that whole thing. You guys know what's going on there. It's a major distraction. It's very frustrating for those of us in mortgage and real estate because there's no question that it's putting a bit of a wet blanket on the market. Interest rates, one of these articles, I'm not going to get into that one, but was talking about average rates right now, 6.85%. That's not a mortgage quote. That's just what the article said. And, there's quite a few articles out there about, can the housing market take much more of this, uncertainty going on? So, there's no question we still have a housing shortage in the country. There's a number of articles that talk about that. But there's also no question that it's more difficult for first-time home buyers to get into houses than really it's ever been. So the first article I'm going to touch on here is about this topic, right? Starter home inventory trails 2019. Now, what you got to realize about starter home inventory is there's just not a lot of homes that are priced low enough to fit into this category of a starter home, which they are saying is under $350,000. There's just less of them available than there ever was. And the median income in order to qualify for a starter home has gone up a shocking 80%, it says, since 2019. So I think there's no question that for first-time home buyers looking to get into their first home, there's not a lot of options for them. It's saying right now the typical starter home is $344,000, up from just $256,000. These are national numbers back in June of 2019, before COVID and all the craziness hit. And that it used to be about 55% of all listings would qualify as a starter home. And right now, only about 37% of all listings would qualify at the new higher, kind of starter home price range. And that just means less options. And certain parts of the country there's much less options for people. And so I thought this was an interesting thing to point out. This is also the reason why we've seen the demographic of the first-time home buyer change. You heard me talk about this when I was reviewing the 2025 statistics a few months ago. The average first-time home buyer is now up over 40 years old. I mean, it depends on where you look, to get that data. But that's basically the trend. Is the average age of a first-time home buyer has gone up, and it's partly because of this. They need to get more established. They need to get deeper into their careers, where they have enough income to be able to get into the housing market. I don't think it's just because people are not as interested in buying homes. I think that there is interest in buying homes. I think that people just need to get farther into their careers, further mature in their financial, adulthood, if you will, until they're at a place where they can even enter into the housing market. So I don't want to spend too much time on this article. I got a few other interesting ones I want to talk about. And I am going to talk about the Road to Housing Act in just a second. And it's, I think it's done a decent job of trying to address some of this. But the second article I want to touch on was actually something that was brought to my attention by one of my colleagues. And it says mortgage volumes point to bank share gains in Q2. And this article just came out, and it says bank volumes, meaning the number of mortgage transactions done by banks, rose by 20% in the second quarter. And, I look at this article, and I had talked actually a few months ago about the potential of the banks, more the institutional banks, coming back into the mortgage space. And, you would think that this article is reinforcing that. And I think to some degree it is. But I also think that it's a function of the current interest rate environment. Bank lending is a lot of portfolio lending. And when banks have their funds, they kind of have a fixed cost of funds. It's much more stable and much lower than a mortgage bank, as an example. And so when you're sitting on deposits and you need to deploy that money, you can choose to deploy that money at a lower cost than where the market's at. And that plays out more often in environments where you see higher overall mortgage interest rates. So in a more competitive market, you might not see as much of a spread. But my other question about this article, and it wasn't addressed in the article itself, was through which channels are those loans being originated? Because just because the bank share of mortgage lending has increased does not mean that they have increased through their retail production channels, right? Banks have multiple ways of getting these mortgages. They could be through correspondent relationships with mortgage bankers. They could be from a wholesale channel, right, which are originated by brokers. So I think at first glance, I wouldn't necessarily assume that what this suggests is that we're seeing the retail, institutional, larger banks coming back with force into the origination part of the business, what I would consider the retail part of the business. So I think that's something we definitely need to keep an eye on. Now, what this is driven by is exactly what I talked about a few months ago, which is some of the regulation around how MSRs are shown as assets on your books and what your leverage ratios are and things like that. I'm not going to get too much into that, but there's definitely capital rules that are shifting that are making banks feel more confident in taking on more MSRs, holding more mortgages as part of their overall portfolio. And there's still some more to come on this. I mean, right now, MSRs need to have a risk weight rating of, I think, 250%. And there's talks about that being lowered as much as 100%, like at face value. And so if that happens, I think you will see the appetite expand. But again, I think the question here for those of us in the origination space is, are the banks going to reinvest in building out these retail origination channels, or are they going to look to deploy their capital through correspondent relationships, wholesale relationships, etc., which obviously would have less of an impact directly on the amount of market share that a loan officer that's in one of those channels, might have. So this is something to continue to keep an eye on. I thought it was interesting, nonetheless, and worthy of a quick talk about because I think we got to keep our eyes on what the banks are doing. I will note, though, that a number of the banks, including Wells Fargo, posted the largest quarterly increase of 42.9%. And as you know, Wells Fargo has been really out of the mortgage space for a while. So keep in mind, when you see percentages like that, if you're coming from a really low number to a modest number, percentages sometimes make it look like it's more expansion than it really is. The only bank that went negative, actually, quarter over quarter was U.S. Bank. And U.S. Bank does still have a very healthy retail presence, but it sounds like despite that, they are losing some market share there. So I think that's interesting. Truist had growth, Fifth Third. These are banks that I think about that are more on the correspondent and wholesale side of the business. So that's kind of what also spoke to me about, where's this growth really coming from? But we'll keep an eye on this and we'll see what continues to happen with the bank space. It's definitely worth keeping an eye on because when they want to buy the market, they can be tough to compete with. I think we've had it pretty nice the last number of years where the banks have kind of backed out. But maybe that tide is shifting, but I don't think it's as drastic as what this article kind of points it out to be. So I do want to touch on the ROAD, ROAD, which is legislation, the Road to Housing Act, which I think has made it through its first kind of steps here in the Senate, or don't quote me on this, but nonetheless, it's moving forward. And there's a lot of things in here, you guys, that are really geared towards helping with making housing more affordable. So I'm going to just scroll through this article. I'm going to touch on a few of these things because I think they're kind of interesting. It's like a 400-page bill. So this is, pretty sweeping legislation. And a lot of this, and I think I talked about this on a previous episode, keep in mind that there's only so much that can be done at the federal level. And so some of this is kind of, federal regulation, but a lot of this is just encouraging state, local municipalities to adopt streamlined processes that are going to help builders, mainly infill builders. So you think about, building of dadus and middle housing, which is where you can take what was a single family lot, get rid of that house and build six, like a sixplex on it. That's like middle housing. And there's so much regulation around, parking and setbacks and, the list goes on that makes it very difficult for these infill builders to really realize the intent of some of these changes that we've seen. I've talked about it a lot on this podcast because I'm really big into the dadu space and whatnot. And the intent is to increase density without having to create new lots. But when you have so much regulation that builders just don't, they just want to stay away from it. So there's quite a bit about that. But there's a number of other things in here that it talks about. So bear with me as I just kind of review some of this. So like I said, a lot of it's around streamlining federal reviews and regulation, mostly, geared towards infill housing projects. And a lot of this, you guys, this goes through and talks about different sections of the bill. And I want to say 5, 6 of these are all geared towards the environmental review process, right? I mean, if you've at all been around new construction, some of the things that have been implemented around, environmental and kind of green energy type of regulations, I get it. I get the intent here, but some of it is just borderline on insanity. And it does drive up costs. There's no question about that. So I'm not going to get into each one of these because we could literally make this an hour-long podcast about all the different sections of this bill. But a number of them are talking about cutting red tape around environmental review processes, what's required of builders, and just a number of things in that area. So we'll just kind of lump that together. The other big section here is around supporting of manufactured and modular housing. Now, look, we just talked about that entry-level home and how there just isn't a lot of entry-level homes, yet we still have a 4 million home deficit in this country. So what's going to bridge that gap? And I think that it's very possible that supporting of manufactured and modular homes may be doing that. Now, one of the things that I read in here, and I don't know if I can find it right off the bat, I don't want to misquote it, but basically what it was talking about is removing the provision that requires that a manufactured home be on a permanent chassis, right? So if you are in mortgage financing or real estate, you probably know that the definition of a manufactured home is a home that's on a metal frame. And what that does is it really limits the creativity that you can have around how you build that house, because you're always starting with a rectangle. Now you might be able to have a couple rectangles put together, but it really does make it difficult to have more creative footprints and design elements that you're really limited to when you're stuck building to a metal frame. So one of the key things here, one of the big sections, is about removing the need for that permanent chassis to be a requirement for manufactured homes. And a lesser known provision that's to do, it talks about a lot of grant programs. I don't want to get into that. ADU construction, modular housing. So that's the other thing, is the modular housing, which is, kind of your factory built homes. What's challenging for factory built homes is, especially if the borrower is obtaining their own construction financing, the draw process is very different on a stick-built, site-built home than it would be for the draw process for a modular building that's being built in a factory. Things are assembled in different order, so on and so forth. And so it makes it very difficult for people to obtain any sort of an actual construction loan to support a building of a modular home or a factory-built home. So I suspect you see a lot of changes as it relates to manufactured housing, modular housing, and factory-built homes. And you guys, that alone really lends itself to providing more options for your first-time home buyers. Now, matter of fact, I think it could even open up, and the article speaks to this somewhere, a whole new, blue ocean, like a whole new opportunity around housing if we get significant changes. And now we have new investors, kind of new builders entering that space, building more creative type homes that are for your entry-level borrowers, if we can remove some of that regulation. So I thought that was huge. And then, the whole second half of the article is just talking about, putting, incentivizing state and local governments to adopt more streamlined policies around, the permitting process. Again, additional environmental requirements that are done typically at a state or local, even like a county level. And this is where, different parts of the country might be different. So we all know that different states do things differently. So just because a program or a bill like this gives incentives to a state to adopt certain streamlined policies, or even, loosen their requirements around some of these environmental things, certain states probably won't have an interest in still participating in that, despite the incentives that the federal government might be providing. So you might see this really take off in certain states, where maybe in other states it is a nothing burger, because they're not, despite the incentives, they're not going to take on that additional removal. To them, they've decided that these environmental requirements are super important to them, and so they may not be incentivized by that. Let's see, is there anything else in this article of super interest? No. So you guys keep an eye on this. This is the Road to Housing Act, and it says it went into effect on July 11th. So it looks like maybe it did pass through. Now it's just a matter of getting it fully implemented. So keep an eye on changes coming from that. Okay. A couple other things, actually, really one other main thing I want to touch on here is foreclosures. The headline says foreclosures climbed 21% in the first half of 2026, pushed higher by stress in FHA and VA mortgages. Like, the sky is falling. Look, no question that we are seeing an uptick in foreclosures. Again, whenever percentages like this are used, you have to think about percentages of what? Like, where are we coming from? Well, where we're coming from is historic all-time lows, right? I mean, you guys, after COVID, like no one went into foreclosure, right? Because everybody got moratoriums, everybody got, restructuring. All of these things happened for so long that the foreclosure numbers were so low that when you see 21% or, in certain areas, REOs, increased 33%, you got to kind of take it with a grain of salt. Really what's happening here with foreclosures, you guys, is we're just now in 2026 getting to a level of foreclosures that is like a historical normal. And we're still not even there yet, by the way. So just take this, like, don't let the doomsdayers, freak you out that the market's crashing, or don't think that this is a precursor to like what we saw in 2008 because we're seeing foreclosures in the headline. You really gotta, and even the article, in fairness, doesn't it kind of alludes to the fact that we're coming off the lowest numbers we've ever seen in history of foreclosures because of a lot of the rules and requirements that were put in place during COVID. But anyway, I'm not going to spend too much time here. Take it a little bit with a grain of salt. There's definitely areas around the country, though, that we're seeing this uptick. So let me see if I can find those. Okay, so the states where the highest foreclosures, and these are number of foreclosures, like Florida, for instance, number one, 27,494 foreclosures. South Carolina, Indiana, Delaware, and Illinois. And then that's followed by... you got Texas, Florida, California, Georgia, and Illinois. So that was based on by volume versus by percentage, right? So percentages, you're looking at Florida, South Carolina, Indiana, Delaware, Illinois, and by sheer volume of foreclosures, Texas, Florida, California, Georgia, Illinois. So definitely pockets that are being impacted more than others. Again, it definitely points out, as the article, as the headline says, that it's really driven by FHA and VA mortgages, more of your government lending. But again, I think part of that is due to, the flexibility that was provided with FHA and VA for restructuring of loans. And look, let's be honest, FHA is the space where we definitely have a lot of first-time home buyers. It's definitely a program that's geared towards more credit challenged. We know that VA allows a lot of flexibility by allowing you to qualify based on residual income. So you can have really high debt ratios. So, those factors do make those loans a little bit more susceptible to, default. It also points to things like increased cost of insurance, right? Some of these states like Florida, California, they've seen insurance costs go through the roof. Property taxes in some states have gone, up significantly. So those other kind of costs that are involved with maintaining your household are definitely a factor. It's not just the mortgage itself. Look, one other thing, before I let you go, I didn't mention when I was talking about the Road to Housing Act. One of the parts in here that it talked about was increasing FHA loan limits. You guys, there's certain counties that have not seen FHA increases in like 2 decades. And there is a big push here as part of this to require HUD to review those. I'm going to scroll through here and see if I can find that part of the article really quick. It's not jumping out at me, so I apologize. But nonetheless, it pointed out that there's definitely areas where you are seeing HUD limits not increase for a couple decades. And that, look, I know because I oversee branches all across this country. And what I've heard from people is, I'm like, well, why aren't you doing more FHA loans? And they're like, well, Tony, there's no homes that qualify for FHA in our area. So this is a real problem. And I think of this, bill, this whole piece of legislation, it's possible that, I think the manufactured modular home thing is huge, but I think the pressure on HUD to increase those loan limits across the country could have as big of impact as anything else in here. I love the deregulation. I love the removing of red tape. I love the streamlining of the process. We all know, I've had Anton on this show, my friend who's a realtor and developer, talk about just the sheer amount of expense. If you look at the overall cost of a home, how much of that is red tape, regulation, etc. It's a lot. Over 30% maybe. And that's crazy. Like, that's not necessary. So I'm very happy to see that happen. All right. I took enough of your time today, you guys. Thanks for taking this journey with me. Sometimes I love just, going on and figuring out what's going on in the industry. And you got to remember, headlines are intended to catch your attention, right? But we do have to read through and understand what's going on. And I hope that you're like me, where as a mortgage professional, I just think it's super important, or a real estate agent, even probably more so for a real estate agent, it's important to know these things because your clients, your customers, they see headlines like this, right? They see headlines about foreclosures going up and they go, gosh, am I getting into a market that's going to crash because of foreclosures? Like, we have to be able to speak to that intelligently about what's going on. So if nothing else, I hope this gives you a little bit of information, but maybe also inspires you to take your own time throughout the week and, subscribe to a Housing Wire, subscribe to some of the other great places out there where you can get this kind of news and it gives you great talking points. Nothing better than a borrower bringing up a concern and you going, actually, I know all about that topic because I just read a great article about it, and you can really feel informed. It definitely elevates you from your competition when you're an informed advisor, not just about loan products and programs, but about what's going on in the industry around us. And that's part of the reason why we do market shares. So hope you enjoyed this episode. If you did, give us a like or a subscribe. Subscribe. Let's get this up to 1,000 subscribers. As I mentioned in my last episode, I got a lot of travel coming on. I'm relocating. So you might get some repeat episodes. We might throw back some of our favorite, reruns, if you will. So don't be surprised once in a while if you see one of those flow in. But I'll try to make it into the studio as often as possible and get you some fresh content. I appreciate everyone's feedback about market shares, and let's keep things going. Until next time, take care.